welcome into the William Branch Group. We got to come up with a name for our studio, like coming to you from the Broadcast Plaza. We're in the content creation space that we've created here at the William Branch Group, and today we're going to talk about types of loans for self-employed people. I tell people all the time, this is my first W-2 job I've had since I worked at Chick-fil-A in high school, and while I very much enjoyed a solid 8-piece and waffle fries, it certainly made life difficult as an adult to be self-employed and to borrow money. And so we know tons of business owners in this community here that we work with on a daily basis. We have products that are available to help you. And so today I'm going to ask the questions because I'm learning. As you know, I'm new to this industry. So I'm learning. This is an opportunity for me to learn as you, our consumer, learns what options. So William, I am self-employed. I brought in about $250 last year, but as you know, I'm going to write off everything I can. So at the bottom line, it's not going to show a ton of money. My wife stays at home with the kids. What do I do? How do I buy a house? I found the house I want. I know I'm ready. My real estate agent's ready to go. What are my options?
So in your case, you have basically a bank statement loan at that point. If you're looking at a minimum credit score of 660 to 680, depending on the different investor that we use.
Which if you're a business owner and you're self-employed, odds are you've got a quality credit score because you've had to borrow money for your business and all that. So, and that's not even that high of a score. That surprises me a little bit. That's a middle of the road credit score.
Yeah, it's a good credit score. So when I start off with credit scores, it just really factors in the down payment piece.
Okay.
So when you get to the 680 score, that's when they're gonna start at about 15%. The lower the credit score, we have a couple investors that'll go down to 660, and that's when you're going to need 20 and 30% down to make this bank statement program work.
Okay.
Over a 700 credit score, you can actually do a 10% down, which is amazing. So 10% down, you don't show any income. We don't look at any tax returns whatsoever. We're going to be looking at 12 to 24 months worth of bank statements. We will determine whether we need to look at personal bank statements or business bank statements. They have different calculations for each one. I have an investor that will, let's say you're a realtor and you have bank statements, they will actually look at 100% of the total deposits. So they're not taking anything off of expenses for meals or travel or gas or car that you would typically write off, insurance, cell phone bill, all that stuff. So that's a huge advantage to be able to do 10% down and provide no bank statements and pay Uncle Sam very little money.
Absolutely. I've heard about these bank statement programs. As a real estate agent, I helped some clients get them, but I was always curious about the inner workings. So I was under the impression you're going to have to bring a significant amount down. So 10% down as credit score goes up, down payment comes down, which is understandable, right? Yeah. Because you've got to secure the property with collateral to make the loan worthwhile. What kind of volume of deposits are they looking for? And I don't know if this is even a feasible question, but let's just use $350,000. Mm-hmm. So if I want to buy a $350,000 house and I've got a 750 credit score, I'm going to need 10% down. And what kind of a total deposits are they looking for? Well,
they're going to take your total deposits, and then based on that, we're going to generate an income figure. So we take those deposits, send them in for an approval. They automatically give us an income approval based on that piece up front. And then at that point, we're just filling in the guidelines to fit their matrix as far as the debt to income. Typically, you're looking at 45 to 50% on these programs. Sometimes they're a little bit less, but that's kind of where it all starts. So it really just depends on if we're going to look at personal bank statements or business bank statements, but we will submit those, already get an approval before you're out shopping for a home so we don't have any surprises once you're under contract.
So now you've given me what I need to know about I'm going to have to come up with it 10 to 20% down depending on my credit score. What other advice would you give to those who are self-employed, who are sitting here listening, saying, you know what, that program makes a lot of sense to me. I'm going to call William, but I'm not quite there yet because I didn't know maybe I needed that kind of look, being a business owner is hard. Cash flow is always a king, right? And so you may not have 10%, you may not have $35,000 laying around liquid that you can invest right now into your home. And so what kind of advice would you give to those who are self-employed to make themselves as marketable as possible to these investors who are lending to self-employed people?
Well, I mean, the down payment piece, Zach, is really the most important piece of this.
So save, save, save.
Yeah, to these programs. I mean, there's not any kind of gray area that we can step into to try to get a lower down payment. So it is pretty much black and white. Yes, it's a little bit more. Could we, if you want to try to get less of a down payment, then we need to show income on your tax returns and pay Uncle Sam and pay normal taxes to the IRS. And that way we can work on trying to get you into a home with a conventional 3%, 3.5%, or 5% down program with very little money out of pocket. The good thing is last year loan limits just went up last year to $647,200, and so I mean you can pretty much buy a home. I don't know the number off the top of my head, but I mean we can help you structure a home for $800,000-900,000 with 5% out of pocket. And that's a huge thing. I mean, granted, we may have to piggyback with the first and second lien, but that is huge to be able to buy almost $1 million home with very little money out of pocket.
Absolutely. So the last question I would have about these bank statement loans would be, what kind of terms are we looking at here? Are we going to look at the same 30-year options that are the same options available in term that they are in other loans, or is it a totally different parameter?
So they do. Typically, we do have 30-year options. There are some ARM products out there that may offer a little bit lower interest rate. I will tell you with this program, interest rates are going to be a little higher, so don't let that fool you or scare you. But at the same time, you may or may not be, you may be renting right now, and you're just giving money to a landlord when you could own a home. And I have a client right now. We're getting ready to start one, and our goal is to just go get the house with the bank statement loan, and our plan is to refinance this within the next 6 to 12 months.